Hello, everyone, and welcome to the Sustainable Finance Podcast, brought to you by Ceres. I'm Paul Ellis, your host for these programs about developments in this fast-growing industry. A marketplace that features advanced climate and sustainability standards will have improved or more stable long-term returns, according to almost 3/4 of the asset owners that took part in FTSE Russell's 2022 Global Asset Owner Survey. Sylvain Chateau, the global head of Sustainable Investment Product Management at the London Stock Exchange Group, which is FTSE Russell's parent company, says these investors agree that successful approaches to sustainability mean they need to take a long-term view in order to manage their investment strategies well. And in 2022, the top reason for implementing sustainable investment among institutional investors at 57% continues to be mitigating long-term investment risk. I'm speaking with Sylvain about the 2022 survey in this Sustainable Finance Podcast episode. But before we start, I want to say a few words about our sponsor. I'm thrilled to talk about the important work Ceres is doing. Ceres is a nonprofit organization working with the most influential capital market leaders to solve the world's greatest sustainability challenges. Through their powerful networks and global collaborations of investors, companies, and nonprofits, Ceres drives action and inspires equitable, market-based, and policy solutions throughout the economy. To learn more, go to ceres.org/podcast. That's CERES.org/podcast. At Ceres, sustainability is the bottom line. Hello, Sylvain, and welcome to the Sustainable Finance Podcast.
Hello, and thanks for having me today.
Yes, I'm very glad you could join us so we can catch up on the FTSE Russell survey for 2022. Tell us what you believe the key findings are from this year's survey, and are there any remarkable trends that have emerged in 2022?
Yeah, so as you may know, this is the sixth edition of this survey, and it's really interesting to have a year-on-year assessment of what asset owners perceive in the ongoing trends. So for this year in particular, I think there are some confirmations of existing trends, but we also see new trends appearing. So about confirming the existing trends, I think that what appears from this edition is that climate is still on the top of the agenda of many asset owners. The second aspect is that because it's been potentially a more bumpy year, I think it's asset owners have confirmed that long-term is their horizon, and that they see a lot of benefits of positioning themselves as a long-term investors when it comes to sustainability. So this is for the, I would say, confirming existing trends. What is appearing as emerging trends that really struck me when I was looking at the results. First one is the emergence of the social theme as a key priority for asset owners. And it's very interesting because we know that governance and environmental items or themes have been addressed for a long time now, and environmental more recently. But social has always been a bit behind. And it's interesting to see that in this 22 edition, social theme is appearing as a much more interesting topic for investors. The second interesting trend, as I see it, is that asset owners are multi-asset class investors, and fixed income is becoming one of their top priorities when it comes to sustainability. So I think also this tells us a lot about how the market is evolving, maturing, and now equity has always been the first asset class of interest in the sustainability world. But now it's really interesting to see that it's truly multi-asset classes, fixed income, of course, but we see also infrastructure, we see real estate, all real asset classes that actually have a lot of interest in the asset owner view.
That's great to hear, Sylvain, because the more we can broaden this marketplace, I'm sure from your perspective, is the better we can be working with asset owners and asset managers across the spectrum. But let's come back to a comment that you made just a moment ago about one of the emerging themes, and that is that social themes are now becoming more of a priority. And in the survey results, it said that was and is especially true here in the United States, where typically that has not been the case. What do you think has raised awareness about social themes, especially among institutional investors?
Yes, so I'm looking at the results when I speak to you, and it's true that 73% answered that social theme were a key priority, but 78% of American asset owners responded about being a priority. Why is that? I think it's the first time that it really comes out as a key trend. So we still need to really deep dive into that and understand what this means. Of course, we've been through a number of social crises recently, right? We have the pandemic that struck for 2 years. Now we have a context of high inflation, increasing prices that have a lot of knock-on effects on individuals and creating a lot of social unrest at the moment. So I think that asset owners, as investors that always look ahead of the curve, I think they are anticipating that this is becoming a much more pregnant risk for them. Now, if I try to look a bit further in the sub-themes that compose the social theme, I see that the area of interest are diversity and inclusion, public policy, labor rights, and this appears as particularly interesting for the US market. Human capital also appears as a particularly interesting area for the US community.
Okay, so now the survey also found that 97% of asset owners in the APAC economies are implementing or evaluating sustainable investing considerations into their strategies, which is the highest rate among all the regions around the world. What's driving this leadership within the APAC economies?
Okay, so maybe first I will start with a caveat on the survey results. So we sent this survey to a number of asset owners, and this year 184 asset owners have answered to the survey. And so it's not the exact same population year on year, right? There's a bit of evolution. And for us, what it was important is to strike a better balance between the different regions and different size of asset owner to get the best representation. And you could argue that 184 panel is a significant panel, right? So I think what was interesting in this edition is that the share of asset owners from Asia and Pacific has increased significantly. So maybe that explains also a kind of enthusiasm for addressing all these topics. But I think what happens also is that, and we see that as in my company as a service provider, is that there is a lot of traction on these topics in APAC at the moment. You can feel that it was a bit shy or lagging behind for the previous years, but we can definitely see that the agenda is really, sustainable agenda is really high for asset owners in Asia at the moment. And it's across the spectrum, I would say. We can see that social themes, climate risks are the themes that they really try to address.
Okay, so that process is developing in the APAC countries. Are there other regional differences in other parts of the world that are noteworthy, and maybe are emerging trends as well that you haven't seen with the same momentum in the past?
Yeah, so a few things that I may comment on. The first one is, so we see social theme emerging, right? And another result was that climate carbon was less of an issue compared to the previous year, and I would potentially say that this is because it's more and more the new normal in the asset owner agenda, especially in Europe. So we see a drastic change in terms of issues that are a priority focus area for European investors. And climate, for example, has dropped down quite significantly over the last year. So it doesn't mean it's not a priority anymore. I think what it means is that because the regulation starts to kick in, they had to work a lot to get at the right level, but now they are ready for the complying with the current regulatory environment, especially in Europe. So that would be one regional trend. Another one that was interesting to mention, and I'm trying to get to it as I speak. So when it comes to, for example, the question that was asked to asset owners, how sustainable investment regulation might be helpful. So really looking at the regulatory aspects. Here, it was really interesting to see that the APAC really showed a lot of interest in improving the quality and consistency of corporate reporting and disclosures, and also looking at improving investors' disclosure to the market around sustainable investment strategies and sustainable investment outcomes. So for me, it also reflects the necessity or the requirement for having more reference points, more standards in the industry, so that when there is more clarity on how to operate, then investors can have a clear agenda and a clear call to action. So that was particularly interesting in the APAC. So so maybe that would be my main two elements. Now maybe a third one, if I may. So about sustainable investment implementation and evaluation. So we really did a kind of aggregation per region. And here it's interesting to see that a very interesting increase over time, right? From, if you look at the 5 last years, the level of implementation was 53% in 2018, and it's now 88%. So this really demonstrates how asset owners are serious about implementing the sustainable agenda. Now, if you look at the regional evolution, what's really interesting is the Americas trend. It was only 40% back in 2018, and it's now 77%. So almost double. So it really shows that there's a lot of traction in this market in the US, and they are very serious about implementing a sustainable strategy in their activity. So I think that really also is an interesting US trend, because it's even more. We always refer as European markets to be the kind of historically the most advanced ones, and you can see that in this very question, because the level of engagement was 72% 5 years ago, and it's now 89%. So it's a lot, but the trend is not as fast as in the US.
Yes, of course, the SEC has promulgated some rules regarding climate reporting and carbon reporting that are starting to go into effect next year, as are many of the new regulatory guidelines for the UK and the EU over the next couple of years. All of them will be focusing a lot more on that reporting requirements that they are putting together that companies will have to follow. And of course, asset managers and owners are all learning a new vocabulary and a new language, really, for making sure that they adhere to these reporting guidelines depending on where they're doing business. And of course, as all of our viewers have heard more than once from you and other folks at FTSE Russell, this is this is a global trend, and it's also moving with a lot of momentum beyond the developed markets. So, as you're saying, the results of this year's survey really indicate that. Now, do you have?
I can
Go ahead.
I can
please.
also add to that. I totally agree. And so it's really interesting to see that there is a lot of regulatory dynamic at the moment in many different markets. I think this is good, but we might have to also make sure that we are all talking the same language at some point. One risk I see from all these recent developments is that there might be some discrepancies between the different taxonomies and different regulatory environments. And a lot of these asset owners have global reach in their investments. And it would be the last thing we would want is regulatory to become a barrier, because there are so many different market or regional specificities that you have to adapt to each of them. So this is an interest. I think that it's as the market matures, it's a trend that we can anticipate, right? I mean, everybody's trying to be developing their own species of and their own color of the regulation. But at some point, I think that they should have a common basis, at least to start, or to make sure that we are talking the same language.
Yes, I agree with you. I'm tomorrow, in fact, in New York, I am moderating a panel at the Responsible Investor USA conference for this year, and that's what my panel will be discussing. We have experts from across the industry and different parts of the world who are going to be focusing on what about these regulatory regimes, and how are we all going to find common ground ultimately that we can be reporting on? Because, of course, we also know that when corporations do business in different parts of the world, they are obligated to adhere to the regulatory regimes in the markets where they are doing business, wherever those are. So I couldn't agree with you more. There's a long way to go in terms of getting the regulatory focus in a dynamic way applicable to all markets. And it may also be true that there will always be differences. So we'll be coming back to that. Maybe we'll bring you back onto the podcast program in the future to have another discussion about this. But for now, Sylvain, where online can our listeners go to find more information about the FTSE Russell 2022 Investor Survey? And how can they get in touch with you regarding the topics that we've discussed in today's episode?
Yes, sure. So I think first, this survey is made publicly available on our website, so you can go and download it. And it's a very interesting source of insight on the market trends. So I would encourage all the stakeholders to look at it. And again, what's really interesting is that there is a kind of tracking of the evolution element to it, which is making it extremely powerful to understand, how asset owners are shaping the market. And what's interesting also is that asset owners has always been ahead of the curve in terms of integrating ESG and more recently climate risks in their agenda. And so it's I think the way we also contribute as a stakeholder in this whole sustainability ecosystem to try to better understand what's going on, how to better service our clients, be it asset owners or asset managers. But again, this is really interesting. And of course, FTSE Russell, we have a number of resources dedicated to sustainability. So both on the research side and on the product side, and our team is more than 60 people and a lot of expertise there. So we are more than happy to go further in the discussion and have deep dives on certain parts of these results.
That's great, Sylvain. And we will attach the report this year, the investor survey, to this program in the Bright Talk channel so that our listeners can access it there as well. So thank you very much for that. So thanks again, Sylvain Chateau, Global Head of Sustainable Investment Product Management at the London Stock Exchange Group. And to our sponsor, the Ceres Accelerator for Sustainable Capital Markets. The Ceres Accelerator is a center of excellence within Ceres that aims to transform the practices and policies that govern capital markets to reduce the worst financial impacts of the climate crisis. For more information, go to ceres.org/accelerator. That's CERES.org/accelerator. And to our listeners, join us again next week for another episode. I'm Paul Ellis, and this is the Sustainable Finance Podcast. Thanks again, Sylvain, for your time today.
Thank you, Paul. Have a nice day.